All right, well, as we enter the fourth and final quarter of the year, wanted to do a review of my present portfolio, which, by its very nature is what I consider the best opportunities. Some of these positions I've been in for a while, and a while for me is a few weeks, and others might be just a day old. There's 16 of them. They're all bearish. Before we get into the 16, just a very quick peek at the spider, just kind of a 90,000 foot view of the stock market. We are below a nice topping pattern here, and we had a very, very positive behavior on Friday in which we opened strong, closed weak. But the downside opportunity now is not huge unless something big happens. And but by that I mean this red line is what I'm looking at right here. This is the spider again. The red line is at 419.6, which is only $8 away. That's like 2%, I think. Just quick math in my head, and that's not very impressive. The reason that's important is because that red line constitutes an important Fibonacci, and it also happens just by complete chance to be the very proper neckline for that inverted head and shoulders beneath it. And so if we fall 2% and then start to rally from there, that could just mean we're range bound for a while. We really need to break that line to look for better opportunities. And it's quite odd because some of the positions you'll see that I'm in have plenty of downside potential. But looking at the spider all by itself, there's not that much downside to go, to be honest. So having started rather glumly like that, let's just walk through these in alphabetical order. Here's Alcoa, which I'm back into again. At least I got in at a decent price. I got in pretty early on Friday. But this is an example of something which is marvelously positioned to be a lot lower, but it could take a while. This tends to move rather glacially. This move, which was a substantial move, it's lost like half of its value, but it also took half a year to sort of grind its way lower. But you can see how tremendous that top is right now. Here's Caterpillar. On Friday morning, I came this close to just getting out, even though it was only a day old. But I didn't do a thing mercifully, and that went from a loss to a profit. Bearish engulfing pattern. Key at this point is to break 265.21. This is nice because it's very heavily traded and it's expensive, which means there's a lot of flesh on the bones in terms of the prospective intrinsic value. Let me see if this is worthwhile. I'll just put that there as a kind of a intermediate term trend line. But yeah, we need to break this. We need to get below that price gap. But anyway, it's only a day old. Here's Crocs, which I've had for a while. It continues to sneak lower. It also had a good Friday in as much as it leaped but did not cross that high price violation that I put right there. So the analog is very much intact. Here's Fifth Third Bancorp. And this is another kind of a longer term hold. It could take a while to sort of meet its full potential, but it's this is an oldie but a goodie. Just hang on to this one. Likewise, Huntington Bank shares, same deal. Tremendous patterns here. This is a little overly sized here. Let's adjust that a little bit. Just really nice looking, and has stayed persistently beneath this price gap. So, and I keep looping back to the what I said at the beginning, which is how the potential for SPY looks like only 2%, whereas this, if you told me it would lose almost all its value in the next year, that would make total sense to me. So, here's IWM, which is my most aggressive position, in as much as it's November 17 puts. That is the earliest thing I've got. Everything else is in the next year. This behaved very, very well. This is exceptional. The open and the high were both right around that Fibonacci, and it fell pretty much all day. So this topping pattern is very much intact. This head and shoulders. This neckline here, which just happens to be the Fibonacci, where it looks great. I did take profits on half the position just because I'm a scaredy cat, but if we can even as modestly as get below Thursday's low, that would be good. And the prospect here is, best case scenario is all the way down to this support, way down here. KBH, another oldie but goodie, doing great, just totally hanging in there. There's the price gap there. I'll be a little more conservative and drag it down to Friday's high, like so. That actually works better for this head and shoulders. And this is very, very well formed. I mean, it's just about perfect. Little bit of a violation here and a teeny tiny violation here on the neckline, but on the whole, this is extremely well formed. Las Vegas, another oldie but goodie. And by oldie, I mean like more than a day. You know, I'm a swing trader, so the fact I've had these even for a couple of weeks makes it seem ancient. But this is a beautiful top right here, and we've got a squeaky clean price gap there to work with. MRO, Marathon, putting the toe in the water on energy again, just with a couple of them. This is the first one. Price gap here, squeaky clean, 27.96, got to stay beneath that, but plenty of downside potential if the energy market as a whole has peaked, because it's very dependent upon expensive oil. So, you know, this could be a range bound play, and even if so, that's plenty of room to work with. Microsoft, got back into this one on Friday, got out of it nicely on Thursday, but back into it, and the dashed line there simply represents Friday's high. Little bit of a violation of this topping pattern. I mean, this is a nice head and shoulders otherwise, but we haven't really broken down. We spent 3 days below, just kind of teasing below that level, and then we leapt higher here. It goes without saying, getting below Thursday's low would really set things in motion on the NASDAQ, because that's a very nice pattern right there. So I think I said last weekend what an interesting and exciting week we might have in store. That turned out to be very much the case. And I would say the same thing, even more so, for the week forthcoming. Royal Caribbean Group, RSCL. This was an interesting one. It had a huge leap pre-market and fell pretty much all day long. Wonderful price gap close here, like so. This looks great, with an eye toward tagging the lower trend line of this channel. Here's RF, Regions Financial, kind of in the same spirit as HBAN and FitBee. Just a slow, lumbering, but tremendously large banking sector top. Here's the second energy stock that I get back into, Schlumberger. A nice 4 1/3% drop on Friday. This trend line is the key. It's been intact since 1987, and we met resistance here with it, and we met resistance here with it as well. And now it looks like we're finally slip sliding away there. This is the ever important SMH Semiconductors. I talked about this on the what did I call it, the Delightful Dozen video. It is not wonderful that we've pierced into this pink zone, but it's not the end of the world. I mean, as of Monday, this could be just like off to the races, but we really do not want to see it push above that line. A couple more, both ETFs. XHB, this is a new entry. I've been waiting for this one, and the opportunity presented itself on a silver platter. There's the price gap right there, 77.97. We got right up close to it, just 3 pennies away, and it pretty much opened at the high and closed at the low. Just absolutely wonderful. Below this tremendous wedge pattern, so this is just a sensation. And the last one, our old sine wave friend here, retail. I hadn't touched this actually during this whole time. I've been amazed at this sine wave, but I hadn't done anything about it. But given the strength we saw on Thursday and Friday, I took advantage and finally, kind of put my money where my mouth was. And so I'm into this. The 61.54 is merely secured to Friday's high, but I think the sine wave is still going to hold sway. And that is all 16. And I've got about 20% cash left over just in case, but fingers crossed for a good week ahead.